Hey everybody, what's going on? It's James here with Crypto Common Sense, and I've got your Bitcoin / cryptocurrency update for November the 18th. It's actually just before 1 p.m. I had a busy day today. The market's been moving a lot, so I've been doing some trading. Also decided to get out of the house and I went for a hike with my daughter. So, sorry this is late, guys. Good news is it's probably not too late. So let's talk about what's going on with Bitcoin real quick. But before I do, please do me a huge favor. Go ahead and hit the thumbs up button on this video. And don't forget to subscribe to the channel if you haven't already. So you're probably going to hear some dings on the video. I apologize. I'm going to be getting these alerts. It's just kind of what it is, guys. I got to have them set because I can't miss trades. So here's what happened this morning for me. I went long, got stopped out of that long position. Went long on a 4-hour divergence up around a little over 83.55, got stopped out, and was able to open a new long, right down around 8,100. It was $8,118 I opened that new long. So already seeing some positive movement on that. But guys, I'm excited about this long trade. I'm still a bear on the bigger picture, but on the short time, this thing is due for a bounce. So check this out. If we look at the, let's take a look at the daily chart, right? We're going to turn off these moving averages. We don't need them for this video. Also going to turn off the volume because I don't need it for this video. So these were those really important lines of support. They failed. So now they're going to be resistance. Okay. So I'm going to leave the $8,200 one there. But essentially, if we look at this thing, it's on the daily, it's not yet oversold, so it could certainly move down more, and it wouldn't shock me to move down more. If we take a look at the CME chart, this orange line is the 200 daily moving average on the CME. We're still above it on the CME. It's down around 78.82. So I could see this pulling back all the way to that level. It's fine. My stop loss is below that. It won't stop me out. In fact, I'll add to my position if we get there, right? But if I look at this on this daily chart, essentially, excuse me, not daily, I want to switch to weekly real quick. We've got these 3 red candles, right? Typically after 3 red candles, we get a green candle. We've only had 4 red candles one time in the last 3 years. The last time before that was August of 2016. So I do expect this week is going to go up. And as the saying goes, price moves up before it moves down, and it moves down so that it can move up. Basically, this is, in my opinion, is a stop hunt. This is trying to stop out long positions before the price moves up. That's what this is. It's also trying to suck in late bears, in my opinion, trying to get people to short it so that it can go up and smash them, which is what it did to me a few weeks ago, right? The ironic thing about trading, the thing that always really sucks, is it's not just about having a feeling about what price is going to do. It's about understanding that timing is just as important. So if you look at this thing, my shorts that I lost 5% on a couple of weeks ago, I would actually be up over 3% right now on those shorts. So instead of losing 5%, I'd be up 3% if I hadn't had stop losses. And it's funny because when you go through an experience like that, especially a really devastating loss like 5%, you start thinking, well, shit, I'm just not going to use stop losses anymore. That stop losses screwed me. But of course, the one time you don't use a stop loss, right? If I hadn't used stop losses in this, the damn thing would have just kept going up, probably pumped up to 14 grand or something and cost me half my trade fund, right? So you got to use stop losses. It's just sometimes you use them and then it's really painful when price does what you thought it was going to do just a little bit later than what you thought. So I do think that people are going to be getting trapped on this move. When we look at the daily chart again, this looks, pretty severe. 4-hour chart, even more severe. We're down here around 22 RSI. That is extremely oversold territory. Of course, as this candle moves up, RSI moves up with it. This was actually a little lower just a bit ago. The hourly candle, again, deeply oversold. We've got this huge wick. Normally that's a sign that bulls were willing to step up at that level, and you'll get some type of pump. And the 5-minute was just absolutely atrocious. This thing says it got down to 7, but that's bullshit. I was watching it. It was actually down like around 4 or 5, and then, because it closed higher, the RSI is based on closes. So, yeah, this thing looks like it's due for a bounce to me. What really got me excited was this. I talked about this, I believe it was in yesterday's video, maybe the day before. I talked about I was going to watch this yellow line, this neckline, if you will, of this W, right? This right here was a down, up, and I said we need to come down and retest this neckline. Well, we did. That's exactly what we did today. We came down and we touched it perfectly, guys. The only regret I have today is I got a little impatient and I tried to go short up around, a little over 83.55. And so I lost money on that short. But if this thing plays out the way I think, I'll make it all back and plenty extra. But yeah, I'm really excited that we touched that line, and I'd really like to see some type of bounce off of it. So the next thing becomes, well, James, how high is this thing going to bounce? Who the hell knows, right? It looks really, really weak. So I'm not sure how high this is going to go. A couple levels that I'm looking at, though. The first level is going to be this level right here, right? This is our downward sloping trend line. I wouldn't expect it to break above this. I would be very surprised if it broke above this. This is up around $8,800 to $8,900. Also, if we draw some Fibonacci levels, let's just take it from here down to here. You can see that we have this golden short zone is going to be up around 8,700. So if I sense that it's weak and I haven't been stopped out yet, right? If I don't get stopped out and it does indeed go up, there's a good possibility I'll be looking to take some profits somewhere in this zone here, okay? But ideally, I'd like to ride it up as high as I can. But, again, if it's weak, it's weak. I'll take my profits. And the same thing, if it gets weak before then, if it starts running in the resistance, for example, one of the areas that it may struggle with, depending on how weak this actually is, it may struggle to getting over the neckline of this right here, right? It may not even get back above 85, 87, okay? Hopefully for my sake it does, because I want to take my freaking long as high as I can, and then I want to go short. I want to flip back short. But yeah, it looks pretty bad. It looks pretty weak. The altcoin picture looks atrocious, guys. Unfortunately, yesterday I was getting kind of excited. I thought, okay, maybe this thing is going to be good, right? I said it needed to break above this red line. It did, but then today it just completely dumped. Not only back under this red line of resistance, but underneath this yellow line of support. So now we're back here in this bear market territory, which is terrible for alts. And a lot of alts dumped, really, really bad. I was looking at OMG earlier. This thing dumped. I mean, look at this 1 hour candle in this thing. Pretty bad. Not the worst I saw. I saw some people going long on EOS last week, or over the last week. I realized I was actually getting ready to short it, and I saw people going along, and I thought, I'll just set it out, right? I'm not going to short it. I'll just wait and see what happens. Yeah, I wish I would have shorted it. This is a 1 hour candle. Look at that. That thing damn near 10% in 1 friggin' hour. But essentially what kept me from shorting it, I'll show you guys real quick. This is what kept me from shorting it. It had been finding support. This was a fairly nice W, not a perfect W, but pretty nice W, right? I would consider it a W. And then it had come down and retested it and bounced off, which was good. But when it was over here, this is when I was like, man, I kind of want to short this thing, right? But I was scared to short it on top of support, which is, normally a good idea. You don't want to short support. But yeah, it just chopped right through that thing and moved down. So now this line is going to be resistance all over again on EOS. And I think a lot of the altcoins probably look the same way. Okay. So yeah, it looks really bearish, guys. And it's funny because when you look at Twitter, a lot of the people are getting bearish now. And that's what always happens, right? It's what I was talking about last week or maybe 3 or 4 days ago. It's when the bulls capitulate that you want to start thinking about going long. And it's when the bears capitulate that you want to start thinking about going short. Right? When bears give up hope and think it's just going to keep going up, that's a good point to short, right? When bulls capitulate and think it's just going to keep going down, that's a good point typically to go long, okay? So that's the Bitcoin and the altcoin picture. Real quickly, guys, I want to explain leverage. I typed some stuff out, so I'm going to go through this with you real quick. If you don't care about leverage, this is probably a good place to stop watching the video. Just please do me a favor and make sure to hit the thumbs up button before you do. But if you want to learn about leverage, I'm going to walk through how this works and how you can use leverage to actually protect yourself when you're trading. But first, I'm going to take this and put it in my other window so I can at least keep an eye on what it's doing while I'm shooting this. All right, so leverage. Okay. Where a lot of new people get in trouble with leverage is they don't understand the purpose of leverage, and they think the purpose is to trade with more money than they have. If you are in certain markets, like the Forex market, that is actually how that works, because you're trading pips, right? You're trading such small movements that you've got to have like $1 million position sizes sometimes to make it matter. But in crypto, the movements are so big that you don't want to be using leverage in the same way that you use it in Forex. So in Forex, somebody might have a $1,000 account and trade with 100x leverage and do $100,000 trades. You do that in crypto, you're probably going to lose your account within a week. It's only going to take one move against you and you're going to lose everything. So you don't want to do that. Essentially, what you can do with leverage in cryptocurrency is you can use it to protect yourself. So in this example, we're going to say that this hypothetical trader has a $100,000 trading account, and I'm going to show you how they can protect themselves. So let's say that they want to trade with $100,000 on BitMEX. That's the exchange they choose. Guys, I'm just using it as an example. It doesn't matter which exchange you're on, okay? Let's say that they're a day trader and they're also doing some swing trades. And by the way, this hypothetical trader, it's basically modeled after me. I'm just using the $100,000 number because it's a nice round number. It has nothing to do with how much money I do have or don't have, okay? So let's say they're doing day trades for $100,000 per trade. So instead of putting $100,000 on BitMEX, where if it gets hacked, they might lose their money. If they get locked out, they might lose their money. If the exchange goes out of business, they might lose their money. Whatever the case may be, right? Instead, what they can do is I can put 2.5% of their portfolio over there, or in my case, that's what I did. I put 2.5% of my portfolio on BitMEX, and if I had a $100,000 fund, that would be roughly $2,500. Okay, so now my risk is $2,500. Instead of having all of my money at risk, I can keep the rest of it in an FDIC insured account, right? If I'm in the United States, or some type of equivalent if I'm not, right? And then I can just move money to the exchange as needed. If I make a mistake and lose that 2.5%, I can just add money back, okay? That's how you protect yourself. And then I can also trade on multiple exchanges. So for example, I might have 2.5% on BitMEX. I might have 2.5% on Bybit. I might have 2.5% on Kraken, or 2.5% on Coinbase, or whatever the case is, okay? So let's say that I'm doing day trades and I want to trade with 100% of my portfolio. By the way, I do not do that. I almost never go over 50%, okay? So actually in this case, I just want to do this really how I do it, okay? So I'm going to delete this stuff. So if I want to do a 50% day trade, right, that's a $50,000 trade in this example. To do that, I take 2.5% times 20x leverage, okay? I'm going to take a look at Bitcoin real quick because I got an alert. It's crossing the 30 RSI, so it's moving up, right? It's crossing it, going up instead of down. That's good. I'm up about 1% so far in that long, so we'll see how that thing goes. All right. So back to this. If I got a 50% day trade, I'm doing a $50,000 trade. I can take 2.5% times 20x leverage, and of course that is 50%, right? That's how that works. On a day trade, me personally, and this depends on your risk appetite and your risk management strategy, but me personally, I don't want to risk more than 0.5% of my entire portfolio. 0.5% max risk, okay? In extreme cases, I might do 1%, but usually 0.5%, okay? So if I got 0.5% max risk of my entire portfolio and I got 100K portfolio times 0.5%, that means I can risk $500 per trade. Okay, if I'm doing a $50,000 trade and I can risk $500, that means that I can risk 1%. My stop loss can be set to 1%, right? So if I go long at 10 grand, I can set my stop loss at 9,900, for example. Okay, that works fine for me on day trades, right? Now, typically, what I'm doing is I'm trying to make about 1%, so my stop loss is actually at 0.5%. Right, which ends up being about 0.25% of my portfolio max. That's how my day trades work. Now, here's how my swing trades work. They're a little different. So if I'm doing a swing trade, I might have 2.5% of my portfolio on a site, and I might go 4 to 8x maximum. Okay, so we're going to use the maximum in this example. Let's say that I do 8x. That's of course equivalent to 20% of my portfolio. If my portfolio was $100,000 and I was using 20%, that would be a $20,000 trade. Now, again, I don't want to lose more than 1% of my entire portfolio in a trade, so I can do a 5% stop loss, okay? $100,000 trade fund times 20%, $20,000 trade times 5% means at most I'll lose $1,000. $1,000 divided by 100,000 equals 1%, okay? Why 5% instead of 1%? The very simple answer to that is because on swing trades, you have to account for larger price variations, right? You may get a wick that goes up 2 or 3% and then comes right back down. Or you may get a tail that slides down 2 or 3% and comes right back up, okay? So you want to have that cushion built in so that you're not constantly getting stopped out of your swing trades. And that's why 5%. It's also why I use a smaller position size, because if I'm wrong and I lose 5% of 20 grand, right, in this example, that would be $1,000 loss. A lot of money, but I still have 99% of my trade fund left. On the flip side, if I try to do a day trade with 100% of my portfolio, a swing trade with 100% of my portfolio, and I set a 5% stop loss and I was wrong, that means I would lose 5% of my entire portfolio on one single trade, which means to make that back, I would have to make 5% on the next trade, and that's very difficult to do, right? So when you do that, it increases your chance of going bust, right? Because you can actually, this is like poker, guys. If you've ever played poker, sometimes you'll get into a poker hand and you'll have the best hand and you'll put all of your money in the pot, but then somebody outdraws you on the river card and they bust you on a lucky draw, right? A bad beat. Well, trading is the same way. Sometimes you get into a trade and it's the right decision. You have the setup, it's supported, the chart supports it, the sentiment supports it, and you made the right decision, but sometimes you still lose, right? Sometimes the trade still goes against you, okay? For example, the trade that I made, the shorts that I made a few weeks ago, they were not bad shorts, right? It just happened to be the day that the Chinese news came out about China accepting blockchain. Terrible timing, right? Bad luck, whatever you want to call it. Doesn't matter. Doesn't matter what the reason was, right? I lost a bunch of money. But because I was using proper stop losses and because I was using proper risk management, etc., right, it was money that I'll be able to come back from. Had I not used proper stop losses, had I been doing 100% of my portfolio, all that kind of stuff, I could have literally lost everything, right? Let's say that I went out and done a trade with my whole portfolio and I was using 10x leverage, right? That move, that pump, could have cost me my entire trade fund. You don't ever want to put yourself in a position where you can't come back and trade the next day if you're wrong, okay? You never want to do that. You always want to leave yourself outs in case it does move against you, okay? So that's it. That's how leverage works. That's how you can use leverage to protect yourself. And the other thing that's great about leverage is, if I do have $100,000 in my trade fund, I can take multiple positions, right? I can say, okay, I'm going to do 2.5% times 8x on alt XYZ, right? By the way, I don't think that's an actual alt. I'm just saying XYZ. And I can do 2.5% times 8x on Bitcoin, right? And I can do 2.5x or 2.5% times 8x on Litecoin, right? I can have 2, 3, 4, 5 trades going at the same time because I'm using leverage, okay? And as long as they all have setups and as long as there's legitimate reasons to enter those trades, there's nothing wrong with having a whole bunch of trades out that equal more than your entire portfolio, because you're not risking more than your portfolio on one idea, okay? Now, I will say this, in this market, I probably wouldn't ever do that, simply because if Bitcoin moves up or moves down, the alts tend to follow with it, right? So very, very dangerous. With all that being said, please remember, I am literally some guy sitting in a spare bedroom, so nothing in this video is trade advice or financial advice. You should always do your own due diligence and seek out professional investment advice before making any type of investments. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. And if you haven't already, be sure and check the description for links where you can follow me on TradingView, Twitter, and also where you can join my absolutely free Facebook group. This is James with Crypto Common Sense. Trade safe.